Live from Atlanta, Georgia, capital of the state. This is your motivational, sensational, inspirational, educational, keenly awaited, highly anticipated edition of Risk Management Part 2 of the Beginner Series. Ladies and gentlemen, boys and girls from around the world, how is everyone doing on this fantastic day? So ironically enough, I'm broadcasting right now from a boardroom in an undisclosed location. Had some business consulting work earlier today, and I just had to kick everybody out. Said, guys, I have a class. I got to teach it. It's important. Get out of here. Or I just snuck into a random building and now broadcasting. One of the two. I'll let you make that call. But just yesterday in class live together, we were talking about how the stock market affords the opportunity to be anywhere, right? Anywhere you want to go. Well, I'm in Atlanta. I'll be in here for the next 3 days while we broadcast. I might be here tomorrow. I might be in another location. We'll see. But thanks so much for tuning in, especially for those who are live. You guys absolutely rock. Deontay, what's going on? Peter, how are you? Jesse, what's up? My man Derek Washington says hashtag boss. Just trying to be like you, man. Just trying to be like you. Aaron, how's it going? So much. Thanks for being here. You absolutely rock, buddy. Brian Hoffman, how are you, sir? Bob Allen in the building. Hello, Mr. Allen. Hope you're doing fantastic. Richard says hello. What's up, Andrew, Alex? Pleasure to have everyone here, ladies and gentlemen. So tonight's class, as you might have heard, is called Risk Mitigation. So we're talking about risk mitigation tonight. So as a quick review, we were talking about support and resistance yesterday, as most of you remember. And we're going to review kind of those topics about support and resistance. So support. All right, resistance. This is a stock called Microsoft. Type in a 2 if you've ever heard of Microsoft. I expect a lot of 2s. I'm sure many of you here have indeed heard of Microsoft. For the people who might not have heard of Microsoft, my younger crowd, my younger audience, Microsoft is they're the company that makes the Xbox, right? If you have a computer, you probably are running Microsoft in some form or fashion. If you don't have a Mac or something like that. And anyway, so this is Microsoft. This is a stock chart of Microsoft, and you'll notice some amazing opportunities with just this drawing, right? Look at this move from November 2010 all the way up to here. That's a 4-point move, ladies and gentlemen, aka a 20% return. You got a second opportunity to do that, a potential third, a potential fourth, and a fifth opportunity on Microsoft, and then Microsoft traded back down using old resistance as new support, and most of us know exactly what happened from there. Of course, Microsoft eventually ended up bouncing. So that's kind of the review. We talked about some support and resistance. Peter says, I can't see the video. I turned the video off for right now. I didn't want you guys to get terrified of my ugly face. So I didn't want to terrify you guys, so I paused the video. But let me know if you can see the screen. You should be able to see that. You should be able to see the screen a little bit. So some support and resistance rules. Number 1, a stock should pop, stop, pause, or bounce from that particular price. The more times the stock touches the line, the stronger the price point is. And here's the big magic number. 6 to 8 lines is all you really need on your chart. 6 to 8 lines, that's it. So a lot of traders will start trading and they'll draw a bunch of support and resistance lines. They'll get really excited and they're like, all right, now what? What do I do? Well, realistically, you need only a few lines on your chart, the strongest ones available. We'll be looking at some of those locations later tonight, but you got to find the most major points, the strongest prices, find those. So when you're starting, feel free to get the extreme high and the extreme low first. So let's go look at that together really quickly, and we'll hop over here. I'll pull up a stock chart. Someone give me a stock chart really quick if you don't mind. It can be any company. First person that types it in will get it. And Tesla, says Christopher. All right, perfect. Let's go look at Tesla. And so what we're going to do on Tesla is I'm going to have a line chart here. I'm going to hide all my drawings for a moment. I'm going to zoom out. And what we're going to do is we're going to draw the extreme high and the extreme low on Tesla, and then we're going to look at some more specific examples. So here's Tesla. This is a daily chart. We're zoomed out as about as far as we can go. And here is resistance number 1, and here's the all-time low. So there's two lines on the chart right there. Now, the very, very top chart, here's what's fascinating about this price on Tesla. The all-time high on Tesla actually occurred back in July 2014. Has the stock come in contact with that price since then and failed to go higher? Well, obviously, as you can look at this, right, Harvey and Gary, we can see that absolutely without question, the stock has done that exactly a few times in the past. It has come here and failed that price 2 or 3 additional times, maybe even a fourth right about there. But it's an incredible, incredible price. And of course, I'm sure you're already drawing some of the support down here on Tesla. Right? Old resistance, new support here, new support here, new support here. Folks, this is one of the most recent moves on Tesla, going from 180 to 280, guys. That's a 100-point move. AKA, that is a massive, massive gain. As an incredible return on your investment and a phenomenal return on your money. So just using support and resistance could have given you the idea and the determination of where to buy and where to sell Tesla. Well, if we come back over here, some of the rules, if you will, when you're drawing your support and resistance, you can begin with a daily or weekly chart. If you're using a daily chart, just go ahead and feel free to look at the past 4 to 5 years. Look for areas of white space. White space help you determine the strong support and resistance areas a little bit faster. And you can use either a candle chart or a line chart. If you're brand new to trading, a line chart oftentimes is much easier for the beginner trader. If you use a line chart. And that's kind of what we've been using a lot recently, is the line charts for this. So here's what I mean by examples of white space. This is a term that we're looking at right here. And so the examples of white space is where a stock stops moving and then there's just no data at that particular price. Oops, give me 1 second. Someone said they couldn't see my chart, so let me try this again. Here we go, perfect. Let me know if this helps at all, Peter. So here's the examples of white space. What I mean by white space is simply where the stock has never been before. Where the stock has never been before, that's what we're looking at. So when we're looking at Microsoft, you'll see that there's no price action here, there's no price action here, there's no price action up here, there's no price action, there's nothing down here. So when you're looking at these white spaces, it helps you figure out where the stock has not been. So if you can see where the stock hasn't been, you can kind of clear your eyes and you'll be able to locate the support and resistance, pretty much that simple. So you'll notice right there, this is another example of Microsoft on a daily chart of about a 3 to 4 year span with only 3 support lines. You have these 3 support lines. Look how fantastic these lines worked as a understandable plan, a visual interpretation of where you can buy and sell. This stuff just excites me so much because, again, just look how beautiful this old support right here acts as an old resistance, and then as soon as it breaks out, where do we trade back up to? I mean, guys, look at this. Look at how fantastic that previous resistance worked. So you would have had an undeniably strong location where you could have visually interpreted where you could have sold that stock, and that's powerful. Knowing that, having that key piece of information is massively crucial and very, very important. So that's just Microsoft. So that's another area of learning how to draw some support and resistance. So let's do one more example really quickly. So someone else give me another stock if you don't mind. Anyone who wants to choose a stock? Anyone? Brian Taylor says First Solar. Okay, Brian, so me and you are going to work together on First Solar. And what I'm going to do is I'm going to use a daily chart and I'm going to put about 6 years of data on the screen. So here's 6 years of data on First Solar. We're going from about 2012 to about 2011. So Brian, I want you to give me 3 prices, okay? 3 prices on First Solar where you can clearly see the stock has stopped moving before in the past. And if anyone else wants to write this one in, Feel free to. Brian gave me a price. He says 75.45. All right, let's draw that. Oh man, killed it. Excellent location. Yep, you're spot on. All right, 31. There's 31. And what else we got? 31, 75, 45. 75 and then 45. I see. So it wasn't 75.45, it was 75 and 45 cents. Got it. Perfect. So here's his 3 lines, ladies and gentlemen. Now, we can make this much more complicated if we wanted to. But let's ask a true or false question. You guys ready for this? True or false? Could we have had the price here at the black arrow determined already based on the price action that occurred here from the green arrow? True or false? Meaning, if we went back in time and there was none of this data existed. So let's say none of this is even presently here. We could have used this green arrow to draw a support level, and when the stock was coming back down to that price, we would have had a visual representation, a price where we could have determined should we buy there or should we sell there or what should we do. So the answer is true, just like you guys are writing in. Fantastic job, great stuff. So yeah, you're absolutely right. That's a fantastic point and a great location. So in this instance, okay, on First Solar, if we're looking at it, can we see right now where a good price might be to buy First Solar? I think the answer is yeah, we do, right around here. If we bought there, do we have a good place that we could figure out where to sell? And the answer is, yeah, we could have this price right here. So that would give us the very strong beginnings of a plan. And that, my friends, is what separates a real life trader from people who do it and often consistently lose money. So let's kind of go through a little bit of this and dig a little bit deeper, because here's the question that a lot of you are asking right now. In your mind and through some emails I've already received, the emails I've received have been, so Jeremy, if this is so simple, how do you go about selecting a stock? Well, here's some 3 pretty simple suggestions. Choose a company that you interact with on a day-to-day basis. Have the stock be trading over $5 in value, and if it has more than 1 million shares trade on average, that'll be super helpful. But any stock that you interact with on a day-to-day basis will likely have more than 1 million shares on average. So what do I mean by this? I mean Panera. Type in a 1 if you eat at Panera. I'm going to type in like 17 ones because I'm a giant fatty. Yes, ones. What about Ford? Maybe some of you drive a Ford vehicle. Or type in a 7 if you have a Facebook account. By the way, if you do have a Facebook account, make sure to like us on Facebook at Real Life Trading. Okay, so if you have a Facebook page, you interact with Facebook every day. You either have a computer. If you have a computer, it's probably through one of these 3 people. More than likely, Apple has something to do with it. Microsoft has something to do with it. IBM has something to do with it. Type in a 6 if you watch Netflix. Yeah, I'm going to get a lot of 6s. There we go. We all watch Netflix, right? We shop at Target. We shop at Walmart. We go to Disney. We type Google into our... So that's the thing, is you can find a company that you interact with every day. And granted, you might not know for sure if the stock is publicly traded. But speaking of Google, my friends, let Google be your friend. So here's an example. Here's what I did when I first started trading years ago. Is I would type in something like, is Colgate publicly traded? Don't feel embarrassed if you have to write that in. I do that at least once a day. I find a company and go, is this stock publicly traded? And then it'll come up and it'll say, Colgate Palmolive. And then it'll kind of tell you at some point, stock quote, CL. Now what's Colgate? Do you guys know? It's a toothpaste. Everyone here brushes their teeth, or at least you should. Dental hygiene is important. Hey kids, it's Safety Sam with your toothbrush example. So anyway, Colgate, right? Ticker symbol CL. So I know that's a funny example, but it's serious because it's like, this is a stock that everyone uses, Colgate. So I didn't know this was publicly traded when I was a younger person, but once I figured it out, I'm like, yeah, that makes sense. All right, so Colgate. So let's go see if Colgate can be, if we can create some support resistance lines on Colgate really quick. And what I'm gonna do is I'm gonna do this faster for you, and I'll show you where I would draw my lines. Or at least some of them. So here's 3, 4, 5, 6. There's my lines on Colgate. So realistically, if you're thinking about it on a legit standpoint, these don't matter, right? These lines don't matter because we're not down there. We haven't been down there for a very, very, very long time. But now on Colgate, is it about to approach an all-time high? Yes. Can we visually look at this chart and determine that this is not a good time to buy Colgate? And I would argue, yes, we can. We can visually look at this chart and know that it's not going to be an absolutely, it's not going to be a great time to buy here because it's at a resistance. So hold off, exactly. Yep. Mark, what's going on, Mark? He says, are these going to be recorded? Yep, absolutely. Thanks for being here, brother. Appreciate it. I think one of your other friends is coming, Nick. Do you know Nick? Same last name? So anyway, that's Colgate. And again, just as an example, right? Just totally an example. But if you ever want to know, is a stock publicly traded, meaning is it on the stock market, just go to Google and Google it. I've done that like 1,100 times, I promise. Right? So don't be embarrassed if you're like, I have no idea if it's on the stock market. I learn about a new stock every single day. I didn't know Domino's was publicly traded until like a year ago, which I know is embarrassing as a professional trader, but hey, there's thousands of these things. So if we're looking at Domino's, you guys tell me, should we buy right now? Yes or no? Oh, ladies and gentlemen, you're all telling me no. You know, I wish you were less accurate, but you are 100% spot on with that answer, at least in my opinion. I would say for sure this is not the most adequate time to purchase Domino's. You definitely be waiting for more of a pullback on Domino's Pizza. So again, just another real life example. Now, some of you might also wonder, can you scan for stocks, or what the heck is scanning? Scanning, of course, is where you get a computer to do the hard work for you, right? So you are able to create certain things in your broker or in whatever that talks about how to scan for something. Scan for candlestick patterns, scan for chart patterns, scan if a stock is at a support or resistance or not. And there's a lot of things you can use for scanning. Finviz.com, I'm not getting paid to promote them, but they're a pretty cool company. You can use your broker, whatever your broker is. You can use live trading rooms. So if anyone ever is a part of a live trading room, they do a lot of scanning already for you. And then of course you can use other analysts, right? Other people out there, people like me who post free content often. There's a lot of people out there who post free content. You can get ideas from them, go out, look at your chart, and take it from there. Deontay says, well, Chipotle is publicly traded. High five. Yes, it is. Learning something new. I love it. Absolutely. Chipotle is very publicly traded. Yep, ticker symbol CMG. I love it. I love it. So, the big question of the day, how to buy exactly? Well, once you do the analysis, right, you want to figure out how many touches does something have. So this stock is called ExxonMobil. So let's count how many touches this stock has on this blue line. So we have 1, 2, 3, 4, 5. So that's 5 touches. So this is, ladies and gentlemen, a line chart, right? Notice the line chart. What I'm going to do next is I'm going to go to a candlestick chart, and I want you to focus your attention on this little purple circle right here, and you'll see that you're going to get one additional touch. Look at that. Boom. You're going to get another additional touch using a candlestick chart. So obviously this 85.14 price on ExxonMobil, very, very strong. So what if ExxonMobil came down to here again? It would be a good buying opportunity in my particular opinion. So now let's zoom in. All right, so what we did is we just zoomed in to one of those circles, one of those red circles. And I know the screen might be a little bit small for you, but can you guys tell me what type of pattern this is? What type of pattern is this? Diante has got it. Yes, KFC is publicly traded, owned by Yum Corporation with Taco Bell and Pizza Hut. So YUM is KFC, Taco Bell, and Pizza Hut. All right, so the good news is getting a lot of answers on this. A lot of them are correct. So this one is the one that we're talking about specifically from last night, is a one white soldier, but it's also a hammer candle. It's also a morning star reversal pattern, which is a little bit more of an advanced pattern. But yes, it's a strong buying candle. Now, guys, I'm not one of those people who will teach you the past and say, hey, look how much money you could make, and you need to take my class, and you need to buy my product, so on and so forth. I'm gonna be real with you. You have to learn these patterns so that you can use them in the future, right? You have to use them in the future. So learn them in the past, use the past to help guide you, and then apply it to the future. So yes, this is a very, very strong candle pattern, incredibly strong. So what we're gonna do is we're gonna zoom in one more time, and we're gonna talk about the actual market, the actual order that you're gonna put into your broker. Now, if you're scratching your head and you're saying, what the heck is a broker? You're gonna have to stick around for class 3. Class 3 is coming up right after this one tomorrow. For those who are here live, class 3 is gonna be here tomorrow at 8 p.m. Eastern. If you're watching the recording, just simply check it out, after you watch this class. So, ExxonMobil. This is the actual broker function that you would place on your broker when you're actually getting into the trade. So the order function is buy to open. Buy to open. So what does that mean, buy to open? Well, that means you're opening a new position, right? You're getting into a brand new trade. So some brokers might only have the term buy. Some brokers might only have the term buy, but either way, that's when you're going to be getting into a new trade. So when you're getting into a new trade, oops, let me go back. I think I kind of went over a little bit of an important place. When you get into a new trade, if you're buying to open, that's when you're going to get into the new trade. You're actually going to be placing the buy order, and you're going to get into the stock share. You're going to get into shares of ExxonMobil. So if you're getting into a trade, the question then becomes, how in the blue moon do you protect yourself? And this is something called stops. This is something called stops. So what I'm going to do, my friends, is I'm going to compare stops to something that you use every single day. Stops are like the brakes to your car. Who here would ever dare drive in their vehicle if they knew their brakes did not work? Probably nobody is my guess, right? There's a good chance that nobody would do that. Stops, stop signs, brakes, red lights, they're all there to protect you. The number one rule of trading is what? Don't lose money. Rule number 2, see rule number 1. Stops help you protect your capital. They are a very crucial part of trading, one of the most crucial aspects of trading, and that's why I literally teach in class number 2. I can't wait any longer before I make sure you all understand how important stops are, okay? So, here's the deal. How to determine your stop is a massively large question. My friends, this question is kind of like me trying to answer the question, what do women want? That's a little bit of a joke. Fine. It's a little funny, but there's a lot of schools of thought, right? There's a lot of schools of thought. Or, what does the fox say? Or anything else, right? What's the meaning of life? What's the best religion? What's the best political party to be affiliated with? You guys get what I'm saying. There are countless schools of thought on how do you determine your stop. I've been trading for a very long time, and I'm not going to say my way is the best way, the perfect way. There's no such thing. What I can tell you is, what I will teach you tonight is revolutionary, and you will not hear it from many other classes or programs. Very, very few programs on the entire planet will be teaching what I'm going to teach you tonight, and it's entirely free. Just keep sticking here, okay? So I will say I know it works, I know it doesn't work, and I know in trading and in life, consistency and discipline are the keys for maximum growth. Here's an example. If you want to get stronger, who's going to get stronger faster? The person who does 10 push-ups every Tuesday for the rest of his life, or the person who does 10 push-ups plus one additional push-up every single day for the rest of his life? Who's going to get stronger? Yeah, the person who's doing it more and the person who's doing it consistently, right? Person number 2. So it's all about discipline and consistency. It's very, very easy to do something for a short period of time. My friends, that's the truth. It is real simple to do the right thing. Who here has dieted before and it did very, very well for about a week? Yeah, my hand's up in the air, okay? I like chocolate and I like beer, and those are not on any diet list, which is upsetting. You know, I'm looking around like, where's the chocolate and the beer on these diet lists? Come on now. But the thing is, if you go 1 week, anyone can go 1 week on a diet, right? 4 or 5 months ago, I went 4 days without eating at all. I didn't eat anything, nothing, not nada, as they say in the South. I didn't eat anything, just drank water. So anyone can do anything for a week, but anything after that, it starts getting hard. That's where discipline and consistency come in. That's just the facts, right? If you really, really, really want something, you got to work for it. Jim Rohn said discipline is the bridge between goals and accomplishment. So if you're sitting there thinking to yourself, man, I have these goals, and you're like, but I never achieved them. If you want to know why you did not achieve those goals, this guy. That's it. And I'm there, guys. I've been there. I'm still there. I have plenty of goals that I haven't achieved yet because I'm probably lacking discipline in some areas. So we can always work on that. We can always better our best. We can always get better. So I know I'm harping on that fact a lot, but it's massively, massively, massively important. Because let's say you take some trades and you get stopped out 7 trades in a row. You might not want to take that stop on the 8th trade, right? Lose 7 trades in a row, you're a giant, you're a sad panda, you're a crybaby. But having that stop in place on the 8th trade, that's discipline, that's consistency. Do the same thing over and over and over every time and it will pay off. I'll prove it to you. All right? So in my opinion, the 3 key factors of determining where to place a stop is location, consistency, and most important, how long you plan on being in the trade. Very, very few people teach you that. If you go into a trade with your plan and you expect to be in the trade longer, you can be more gratuitous with your stop. The truth is, ladies and gentlemen, you have to determine this, how long you expect to be in the trade, and there's no perfect answer. Just pick a number bigger than a minute. Okay? Be realistic with yourselves. I'll give you some guidelines that can help you, but always, 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 before getting into a trade, write down how long you expect to be in that trade. So here's an example on ExxonMobil, right? If you're getting into this trade, here's how one could have done it. So someone's looking at getting into this trade. This is where you're going to buy to open. And this is the location that you're buying. So when you're buying off a support, you can place a stop under the current support level and below the prior day's low. Below the prior day's low. So the low of this candle is going to be right about there. Now, what if you wanted to be in the trade for, 3 years? Okay. Let's say you want to be in the trade in 3 years. Maybe put your line here at the purple line, right? Be a little bit more gratuitous with your stop. Give it a little bit more wiggle room. What if you want to be in the trade 3 months? You probably place it here at the red line. Okay? You guys get it? Brian says, same for hourly trades? Yeah, same for hourly trades. You have to determine how long you want to be in the trade. So the longer you plan on being in that trade, the looser your stop can be. So here's where a great place to place the stop would have been And in your broker, this is a sell to close order, a sell to close. Right, so when you get into a stock, you are buying it. When you get out of the trade, you are selling it. So this would be a great example of where you place your stop. And notice there's a little bit of white room in here, a little bit of wiggle room. Right, you can always place that, a little bit of wiggle room, because sometimes you do it. Let's say you put the stop right here. Obviously, we can see that this did not happen, but the trade could have done boop, and then bounced again, and you would have gotten stopped out. You would have been a sad panda, and the trade would have continued in your direction, but you had your stop too tight. So let's continue a little bit, because we're going to get to some math in just a second. But let's look at this particular situation. So what I'm going to do is, let's say that you had a buy to open position right here. Let's figure out where you guys would place your stop. Let's see if I'm going to do some colors here, and I want you guys to write in. Where would you place your stop? Here at the red line, here at the purple line. Oops, I didn't draw a purple line, sorry. Let me try that again. All right, here at the purple line, or here at the green line. Where would you place your stop? Purple, red, or green? Now, some of you might say, well, it depends on how long I want to be in the trade, right? And I would agree with you. I would totally agree with you. So if you want to be in the trade a very, very, very long time, you're going to be looking here at the green level. Otherwise, you are unquestionably going to put your stop more than likely here at the purple. Exactly. You're going to place your stop here at the purple. We can see if you did place your stop here at the red line, you would have gotten stopped out. You would have gotten stopped out, and you would have gotten stopped out by just a few pennies, because your buy order would have been based on this candle right here, because this candle in green is a one white soldier. So your sell to close would have been down here approximately, and that's where you would have placed your stop on that trade, and it would have worked out pretty good. So here's what we're going to do in this particular situation. So here's another chart, another example on another stock, and funny that you mention it. This is First Solar. How funny. We used First Solar earlier today. So what I'm going to do is I'm going to zoom in to where it says, let's zoom in. I'm going to zoom into there, okay? So the black arrows are pointing to where some support and resistance were drawn. So what I'm going to do is I'm going to zoom into First Solar, and we're going to look at this particular pattern. Type in a 1 if you can clearly see the one white soldier candlestick. Oh yeah, there's a bunch of 1s coming in. This is exciting. Getting tons of 1s. So let's go ahead and set up the trade. Here's the one white soldier. Here's where we're getting in. This is where we are buying to open. We're actually getting into shares. And this is where we plan on having our stop. Boop, right there. Now, in hindsight, we can see the trade would have worked. But if we did not see any of this data, would we still have taken the trade? And the answer needs to always be yes, if it fits my plan. If I created what I wanted the stock to do, and the stock literally did exactly what I asked the stock to do, you have to do that. You have to stay disciplined. Discipline is doing what you have to do when you don't feel like doing it. That's what discipline is. Discipline is doing what you have to do when you really don't feel like it. And it's going to happen a lot. Type in a 1 if you're a marathon runner. Any marathon runners in the house? I've never run a full marathon, but I've done some halves. Haven't done the full yet, mostly because I hate running. But I do it anyway to stay, semi in shape. Relatively. To stop looking like a giant orb walking back and forth everywhere. So here's the deal though. In running, when I was training for certain things, there would be times where I did not want to run. It would be cold outside, probably 27 degrees. I didn't want to run, but in order to train for the marathon, you had to. So there's going to be times that you don't want to do things that you have to do it. Kids, you're going to be the same exact way. Young adults, you're going to be the same exact way. There's going to be things, plenty of things in your life where you just don't feel like doing it, but you're going to have to if it's part of your plan. So here's going to be the cool part. How do we stay consistent? Well, this is the simplest answer ever. How do we stay consistent? Just be consistent. Just do it over and over again, right? Here's a quote that you can jot down pretty much for the rest of your life. If you can be consistent, you will be disciplined. It's a mathematical fact. It's a transitive property. Consistent equals disciplined. So the quote is, if you can be consistent, you will be disciplined. When you are disciplined in the market, you will become profitable. Think about what I'm saying right there. Will. If you want to be profitable in the market, you got to be disciplined. If you're not profitable in the market, it's because you probably aren't disciplined. I know that's going to be hard to hear for some people, but it's true. And the only way I can say that is because I've been there. I've done that. I've bought the shirt. I've had the hand stamp. I've walked the long line. I paid the absorbent price for the ice cream cone. I bought the $7 Budweiser. I rode the ride. I stood in line for another hour and a half. I got my picture going down the waterfall. I had the spinny helicopter on my hat. I had the shirt. Then I got another shirt and another shirt. Then I got kicked out the park because I wasn't disciplined. Okay? I've been there. Been there, done that. So you've got to be consistent if you want to be profitable, if you really want to be profitable in any aspect of your life. It's not even just the stock market. It's any aspect, man. You've got to be disciplined. So famous runner in the Olympics, Jesse Owens, likely an American hero. He has a quote that says, we all have dreams. Every one of you, every single person here has a dream of something they want to accomplish. But in order to make those dreams come into reality, it takes an awful lot of determination, dedication, self-discipline, and effort. There is zero chance you're going to accomplish anything you want to accomplish in life without hard work. That's why most people who win the lottery, what happens, folks? What happens? When people win the lottery, what happens? The vast majority of them, like 95%, lose all of their money. Why? Because they're not disciplined. They mentally are not ready to handle the money. They're not disciplined. It's going to be the same way. So if you are finding it difficult to successfully trade a $5,000 account, right? What makes you think you can properly trade a $500,000 account? You know, if you can't make money with small amounts of money, it's going to be really hard to make money with big amounts of money. So you just got to be consistent. So here it is. Here's the math formula if you want to make money in the market. Consistent plus being disciplined, right? Just like Brian said, just doing what you have to do, and it's going to equal profitability. So let's talk about consistency right now. We're going to get into some trading formulas. We're going to be talking about consistency and trading the R's. Again, as a reminder, there are very few programs out there who teach this. For those who do, congratulations. You guys are absolutely fantastic, and I'm proud of you. So what is an R? An R is simply an abbreviation for risk unit. R equals risk unit. A trader must become a master of risk management in order to break through to the professional level of trading. Most companies will teach you this part right here, and they're going to say how important it is, but they're going to leave out how to calculate it. Type of 3 if you've been into that program before. You've heard that pitch over and over and over and over and over in the stock market, like, hey, you've got to master risk. Risk is very important. You've got to keep an account of risk, but you've never learned how. Right? So we're going to talk about that tonight. Okay? We're going to discuss it. Now, there's a lot of trader psychology that goes into this. Here's the truth behind this. I could sit here and talk about this one bullet point for about an hour. The quickest and most real way for a trader to become consistently profitable is to trade to acquire skill rather than go after money. Okay? So do this for me. Pretend that you're not trading money anymore. Pretend that they're just numbers on a screen. And you are trading risk units, right? You're trading Skittles. It doesn't matter. You're not trading money. Let the fear of money go away. Because this is a bullet point that I could speak about 9 hours. In order to become a professional trader, you have to lose the fear of losing money. You have to. That's what discipline is. Being disciplined means you do lose. You end up losing, you have lost the fear of losing money. So if you're watching this class and you've made it here so far, I suggest if you get a chance, hop over to my website, reallifetraining.com, and then go to one of my, a very, very popular article that I absolutely loved writing. I love reading it, and I love how much it has helped people in the past. I think it's one of the very first articles I ever wrote. It's called Trading the Stock Market and the Fear of Losing Money. Go read that, because Deanna says it is hard to lose the fear of losing money. I agree. There's a deeper seated reason. I'm sure you've all heard the phrase that trading profitably is all a mental game. It's all in your mind, right? It's all in your mind. If you're scared, it's all in your mind. It's all in your mind. So you have to lose that fear. So this helps. This helps, right? Creating, instead of money, it's now just units. It's now just poker chips, as Peter has said. Right? So there should never be an instance when the stop price is not determined before entering a trade. Someone asked earlier, should they be hard stops? Yes, they should be hard stops. Make them hard stops. So let's go into this. Again, let's talk a little bit about this, because an R is simply a unit of measurement allowing you to know in advance how much money you're going to lose on a trade. So if you can start building certainty with your trading, if you start building certainty with your risk, your fear level will go down. Okay, Deanna? I'm telling you that for right now, because remember, think about it. If you know something is for sure going to happen, you become less afraid of it, right? If I tell you tomorrow the sun will rise with a 100% certainty, there is zero chance the sun will not rise tomorrow. It'll be here. So with that certainty, fear goes away. The world's not going to end tomorrow. Everything's going to be fine. So there's no fear. So with certainty, fear goes down. And that's what this formula is going to help you create. So what I want to do is I want to talk about a trader. This is a fake person. I don't have a trader who's did this. I'm sure there's someone out there named Devin, but this is not based on a real example. This is just hypothetical. So let's say that Devin took 3 trades. So Devin took a trade on GMC. Devin took a trade on 3D printing, and then Devin took a trade on Time Warner Cable. Okay. Devin made $975, $975. That was the risk that Devin took on the trade. And 3 times in a row, he hit profitability, and he was pumped up. He was excited. Guys, 3 trades in a row. He's like, oh yeah. Right? And look, he's trading both sides of the market. He's going up, he's going up, he's going down. He's feeling good. So what does he do? What does Devin do? Devin's like, I'm unstoppable, first of all. Okay, number 1, I'm incredible. So I'm going to risk a little bit more money on my next trade because I'm going to make a lot of money. He risks $6,000 and he loses the trade. So my friends, he has a 75% win-loss ratio. Yet, mathematically, he is losing money. He is losing money, mathematically. So, in that instance, let's do the exact same position. And let's say instead of Devin getting inside of his own head and getting aggressive, or let's just say Sam, doesn't matter, the names don't matter. Okay, instead of Devin, let's say Sam took the exact same trades, and instead of risking $6,000, Sam risked the exact same amount of money. What did he do? He stayed consistent. Would you agree, Deanna? He stayed consistent. He risked 975, 975, 975, 975. He was consistent across the board, didn't change. And what happened, ladies and gentlemen, this is a big, big breakthrough. I want this to be a massive breakthrough. He made money! What? Folks, nothing changed in this example except risk. Let that sink in. Not the strategy, not the stocks, not the direction, not the company that person subscribes to, nothing. The only thing that changed was the risk consistency. That's it. That is it. He still lost on the trade. Let that sink home, my friends. He still lost. He still lost on the trade. But he's making money. You guys get what I'm saying? That's a big deal right there. Man, that is massive. When I saw that math, I was like, no duh. Geez, are you kidding me? Keep the risk the same. Then you'll know, is it you or is it the market or is it the strategy? So when you're trading the R trading keeps you consistent. It removes the emotion of money. It limits your losses to a, check this out, a certain predetermined amount. It prevents you from blowing up your account, the thing that I care the most about, all right? Folks, again, at real life trading, I'm not gonna promise you the world. I'm not gonna be here to tell you that you can turn $10,000 into $100,000 in a year. What I'm gonna tell you is take that $10,000, learn how to trade, and make sure it's still here a year from now. And then watch the doors fly open for you, okay? This type of trading will not make you a millionaire overnight, but it will keep your account from just getting destroyed. Okay? This is a big deal. So again, certainty. It provides certainty. Humans love certainty. We love it, we crave it, we need it. Certainty is very, very important. So if you have certainty, okay, if you limit your losses to a certain predetermined amount, it helps you massively. Big, 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 big takeaway. All right, my friends, huge takeaway. So how much should you risk? I guess then becomes the question, because from this, we're going to start getting into the math. A trader's risk unit should not exceed 2% of their cash account value. So here's some real life examples. Let's say that you have a $5,536.79 account. Your R should be about 110. You can round it to 110 even if you want. It doesn't have to be 73. If you have a $16,000 account, 320 bucks. If it's 1958, it could be 40 bucks. Okay. So therefore, no more than 2% of your account should be risked on any one directional trade. So I had a student who emailed me the other day, and he has a $1 million account. And he said, hey man, I love this concept, but 2% is $20,000, and I don't want to trade, I don't want to risk $20,000 per account. What can I do? And I was like, well, let me just lower the risk, right? I said it should not exceed 2%. So for me, I actually like hanging around the 0.5% R. I'm pretty comfortable right there. I like the 0.5%. If you have a $50 account, Brian, keep saving money. It's a great question, man. It's okay. We all have to start somewhere. Keep saving money. Okay? Don't drink coffee. Don't buy soda. Put money in your account. Keep saving it up. Get to at least $3,000. Get to at least 3,000 so you can start making it. But yeah, it's $50 is not going to move mountains. But you guys get what I'm saying? Any questions about that? So what I want to make sure you understand is you determine your R value. I'll be happy to help you out, but it's up to you at the end of the day. It should not exceed 2%. So again, if you have a $10,000 account, your R should be 100 bucks, approximately $100 to $200. Okay, that's about 1 to 2%. If you want to do less than 100, that's fine. Shouldn't really be more than 2%. I'm going to hang out here for just a few seconds. Any questions so far on this? We got about 20 minutes left in the class, in case you're wondering. We're going to get into some 4th grade level math in just a moment. Gary says, great so far. Okay, fantastic. Brian's good. Bob's good. Dina's good. Deanna's good. Steve's good. Everyone's good. All right. Let's continue then. So dealing with a loss, assuming you have a $2,500 account, your R is 50. You can limit yourself per trade to a 1R loss. So 1R just simply means it's 50 bucks, that's all. Now the reason I say an R, folks, is because it keeps people on the same playing field. So I'm sure most of you know by now, I do have a trading room where we trade day in and day out professionally with traders from all over the world, okay? And just earlier when I mentioned that I had a buddy email me, well, he's a buddy now, but when he emailed me, he had a $1 million account. Some of you typed in the chat pane, whoa, $1 million, oh man. So imagine if he's in my trading room, he's like, hey guys, just made 40 grand. You're gonna be like, what the heck is going on? I just made 200 bucks, man. Jeez, you know, so you're gonna feel down. So an R keeps everybody on the same playing field. Okay, so if I make 3R a day, so actually I made 1.8R today. You guys have no idea how much money that is. I'll tell you, it's almost 900 bucks, but 1.8R, good, not phenomenal. It's an average day, but this number can be anything, and it keeps everybody on the same playing field. That's the great news. Mark says, does the R include the commission fees? It does not, because there are some brokers out there that no longer charge commission, like Robinhood, right? But you can always factor that in if you want to. Okay, so that's the point, man. I mean, it's like you limit your losses. So if you want to limit your loss to 1R per day or 3R per day, that's also okay, but definitely have a limit at some point. This is for more active traders. You know, it's 3R a day or 6R a week. It's more active. For most of you, it might be 2-3R loss a month is your max, and then you just move on from there. But you've got to formulate the amount. Dennis said, so you will limit your trades too if you have a small account. Yeah, absolutely. Of course. You got it. You got it. Now notice, I did want to say this. Have you guys ever wondered why the R is backwards in real life trading? Have you ever wondered that? Two reasons. This is the R from real life trading. So that we built the whole concept of the company around risk mitigation, right? So that's why the R is in there, number one. And number two, if you look closely, you'll see a candlestick in the middle of the R and the L. That's just called creative branding. All right? So anyway, just in case you never saw the candlestick, it's there. And he says, super clever. Thank you. Thank you. That took a while. It took a few months of brainstorming. That did not just pop in my head. What has been seen cannot be unseen. Yes, I know. It's amazing. Amazing, amazing. So again, your maximum R value to lose in a day, week, month will be crucial to follow and very important to your trading plan. Alex, you're asking about how many trades you should place a month. We're going to be talking about that in class 4 when we actually build the plan. So for my option traders, I get people who contact me a lot saying, you never talk about how to put stops on contracts based on your R. Well, if you are an option trader, you know anything about options. If you don't worry about it. But if you do, it's right here. Okay, we're talking about it at this point. So to determine how many shares you're going to be buying, right? So when you're getting into a trade, to determine how many shares you're going to get into, you're going to take your R and divide it by a number. Who determines your R, ladies and gentlemen? You do. You determine it. So this number is going to be consistent. If you're comfortable with this, write in what you want your R to be. I promise I'm not going to take a screenshot of this. It's not going to go public anywhere. I'm going to type mine in. I trade the $450 R, okay? But type in what number is comfortable for you. And with that number, that's going to be your R. That's how much you're looking to take a trade on. All right? So once you have your number, from there you simply divide it by the stop loss. And we're going to be talking about that literally in seconds. So the formula is R, right, the number that you like, divided by your stop amount equals the amount of shares to trade or the amount of contracts. Okay, so again, if you come up with shares and it's like 612, then you would do 6 contracts for those who trade options. Again, if you don't know anything about options, it's okay. More on that later. So trading the R's, let's talk about this and let's draw a support line, okay? And let's look at the support line and where we would have gotten into the trade, what it would look like and all that jazz. So this is Hawaiian Airlines, ticker symbol HA, and this is one of the most profitable trades that one of my buddies has ever made on Hawaiian Airlines. In case you're wondering, my friends, this was 2 years ago, 2.5 now, 2.5 years ago. This particular trade that we're looking at on Hawaiian Airlines right now increased by 400%. Yeah, so this is the one we're looking at. This is a big move, right? So we're going to talk about that, Alex, in just a little bit. About the 2R, 3R, 6R. We're going to get to that. So if you bought this trade, let's look at the math behind this trade really quickly, okay? So if you bought to open this trade, you would get in at 14.50 at the green line, and your stop would be at 12.50. Okay, so again, this is the same concept we were talking about earlier. You get in, you place your stop below the support, and then from there you just do the math. This might not even be 4th grade math. This might be 2nd grade math. I haven't been in school in a while. In China, this is kindergarten math, but you guys get to decide. Okay, so you take the entry, you take the stop, and you subtract the two numbers. You take the difference. So can anyone do the math, 14.50 minus 12.50 in their head? It's going to be tough, I know. Can anyone do that? All right, so the number is 2. So if your R was 50, this is an example, right? Use your R. Go ahead and use your R and do the math for me. How many shares would you have bought on this trade? Go ahead and use your R, type it into the chat pane from what you just gave me earlier. You would use 25 shares, exactly. That's how many shares you would purchase in this situation would be 25 if you had a risk of 50. Now, how much would that have cost you? So that's an interesting point, right? So if you have 25 shares, you take 25 and you multiply by your entry price of $14.50. 25 times $14.50, and your investment amount is $362. That's how much money is actually coming out of your account to do that trade. But your risk, Dina, is only 50 bucks. Pretty cool stuff. All right. Okay. I see. I get it. So in this situation, let's just go ahead and do the math. It's the exact same numbers, just a different R. The exact same numbers. I didn't change anything, just a different R. Who can do 300 divided by 2 in their head? John says, how much of your total account would you want to risk on one trade? So as mentioned earlier, John, your R is no more than 2% of your account. So that would be 1%. Let's just say 1%. Whatever your account is, 1% of that is your risk on every trade. Not your investment amount, but how much you are risking. Two totally different things. All right, you guys all got the answer, 150. Very, very nice. You're welcome, John. My pleasure. Anytime, buddy. So 150 shares. You guys nailed it. So let's do another one on VNDA. VNDA. So this is another example. So let's say you got in on this trade at 13 bucks and your stop was $9 and your R was 300. How many shares do we have on this example? Bow, 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 bow. 75. 75. Very, very easy math. So again, take 13, you take the difference between your entry and your stop, and you're going to come up with your stop value, and you divide that out of 300. So 300 divided by 4. All right? Now, as we progress, here's the cool part, folks. As you go more and more and more, deeper and deeper into real life trading, as you learn more and more about this stuff, I'm going to help you take this trade much, much sooner. Okay? The risk reward on this trade, terrible. But I will help you get better at it because this is a very, very, very good signal to get in quicker. And you could have placed your stop here or even here. making your risk reward much better, and you would have been able to exit up here for a great profit. Right? So if you had tightened up your stop a little bit, gotten in a little bit earlier, you would have made some good money on this trade. Now, even with the setup, you still wouldn't have lost a lot. You actually would have made a little bit of money, Dorothy. Not tons, but some, right? Some money is better than none, or at least someone told me once. Okay, so great job. So when I'm mentioning risk reward here, risk reward is how much money you're risking for what type of gain. Okay, so would you risk $500 to make a nickel? Would you take $500 out of your wallet to make one single nickel? You probably shouldn't, no. Would you risk a nickel to make $500? Yeah. Yes, you would, right? So when you're getting into a trade, it's all you got to want to make more money than you're risking. Okay, so if you're risking $100, that's 1 R. Alex, your goal should be what? More than 1 R. Your goal should be 2 R or 3 R or 4 R, right? You should have more than 1. So this is not even algebra. If you risk 1 of something, you want more than that 1 of something. Okay, so if you risk 1 nickel, you better get more than a nickel back. Am I right? You want to make some money, honey. I've never said that before. Can you guys just forget that I ever said that? So let's talk about risk certainty and risk reward here for a moment. Let's talk about risk certainty and risk reward. So again, we got about 15 minutes left approximately. Maybe a little bit less. So let's say the guy's name is Gary. And don't even worry about these trades up here. These trades don't even matter. They're just hypothetical trades. Doesn't matter. Okay. So Gary has a risk. Notice what Gary does. Womp, womp, womp. Gary risks too much on the 4th trade. He risked too much on the 4th trade. He lost money. So in this example, right, his risk reward on his first trade was 1 to 3. Which means if he risked $55, Alex, he made 3 times that, which I think is 165. In this scenario, his risk was a 1 to 1, he lost $55. In this scenario, his risk was a 1 to 2, he made money. And then in this trade, it was a 1 to 1, and he lost $275. So his take-home pay, negative $55. Okay, negative 55. So let's take Lisa. Lisa, shout out to Lisa. What's up, Lisa? Let's say Lisa keeps her risk reward consistent. So remember, ladies and gentlemen, Gary did not do that. Gary changed his risk reward, right? He took some 1 to 2s, he took some 1 to 3s, he took some 1 to 1s, and he changed his risk up. So what if Lisa, being a professional real-life trader, keeps her risk reward the same at a nice 1 to 2 and keeps her risk the same? She makes money here, she loses money here, she makes money here, she loses money here. Can we guess what happens at the end of the day, folks? Lisa is profitable. She is making money. She made 3 times more than our previous person because he lost money. You guys get what I'm saying? Consistency is key. I like that, Dina. Ron says, is Lisa cute? Oh, yeah. Oh, yes. Yes, she is. So let's talk about this a little bit more. So let's say that this is the setup. Here's the entry. So let's talk. So the number of shares is also 300. Okay. So Alex says, how do you determine to go for a greater than a 1-to-1 risk-reward ratio? Based on your charts, right, Alex? If you have a support at a particular level and you have a resistance at this level, so let's say your resistance is way up here, and you're like, man, the support is so far away from this resistance. If I'm risking this amount of money, I'm looking to sell up here. Your risk is greater than your reward. That simple. You want to ask yourself, is there a chance that the stock can actually go where I want it to go? Can it go far? And you base that off of your support and resistance. Right? So in looking at this particular example, you would have gotten a very nice gain, right? So you had 300 shares, you risked $1, you would have bought 300 shares, and you would have gotten a good risk reward. Derek says, have you made a calculator through Excel for this? Oh yeah, of course. Absolutely. So here's another one. So Alex is asking a great question, folks. What's a very, very easy way, a super, super fast, easy way to determine a 1-to-1 or more risk-reward ratio? Guys, this is a no-brainer, okay? If you create a stop price, okay, so where you're getting into the trade and where you're getting out of the trade, multiply that number by more than 1. And then just sell there. Okay? So if you have a stop value of $1 and you're like, well, where's a 1-to-3 risk reward ratio? Well, then multiply that times 3. So instead of having a $1 stop, you take $1 stop, you multiply it times 3, and it gives you where your target would be. So in this particular example, let's say we wanted a 1-to-2 risk reward ratio. Okay, so we would take our $1 stop, we'd multiply it by 2, we would find out where that is on the stock chart. Look where it is, that green line, that is target 1. That green line is target 1, so that is your second place of you're going to be selling this particular position. Because it's a 1-to-2 risk reward ratio. You're simply taking your stop and multiplying it by 2. So let's look at this particular trade, ladies and gentlemen. So on this trade, could this stock have gone higher? Yes or no? Could the stock have done this? Sure it could have. Did it, ladies and gentlemen? No, it did not. So what happens in this trade? I lost on the trade. Oh no. How much did I lose? How much did I lose? I lost 1 R. Exactly. I lost 1 risk unit. That's it. 1 risk unit. I can live to trade another day. So in this situation, what if we do the exact same scenario again and we take this trade? Okay, so you have your stop placement here. How much would be risked on this? Oops, sorry. How much would be risked on this trade? I think I might have done it again. So if this is your stop here at 33 and your entry is at 35, how much is your risk, ladies and gentlemen? Okay, your entry is at 35, your stop is at 33. How much is your risk? Yeah, it's $2. Okay, $2 is your risk. So if we want a 2R gain on this trade, where would our target be? Where would our target be? Alex, congratulations, buddy. You nailed it. Yep, you nailed it. You take 2R, if our R is 2, you multiply it times 2, 2 times 2 equals 4, and you add 4 to your entry, so 39. And is 39 a previous resistance point where we've been before, ladies and gentlemen? Is that a location where we can see in the past we've sold off from that point? Yes, it has. By the way, this trade worked perfectly. So here's the deal. I lost $450 on this trade. I made $900 on this trade. Am I profitable? Yes or no? And there you go. Now, what you may not know is that trade, taking EA Games twice, that to do that, it took about 2 months. It took about 2 months. So let's talk about the how long portion of this for a moment. And now this is all based on my opinion. I think there's 4 lengths of trading. You have day trading, you have swing trading, you have what I call core trading, and you have what I call life trading. Okay? Day trading is a trade where you get in and get out in minutes or hours. So obviously, folks, your stop is going to be very, 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 very small. Okay, most of my stops, if I'm day trading winning, are like 40 cents or something, 10 cents, right? They're very, very tiny. Swing trading, on the other hand, we're looking at is a little bit of a longer term trade style. So swing trading, you can be in that trade for days to maybe months, or you could be days to weeks, days to months. You guys get what I'm saying, right? And then you have longer term trading, okay? And then you have forever, okay? What is forever? These are investments, okay? These are your 401ks or IRAs. They don't have to be in IRAs. They don't have to be mutual funds, okay? In fact, I can teach you how to outperform a mutual fund with your eyes closed, just about. But the investments, these are long-term tradings, years. So you're in these 3 to 5 years, like minimum. Okay, so I think everyone should have some type of long-term investment. Even if you don't have a big position, don't worry about it, right? But those are the 4 main lengths of trading. And the greatest part about it is my goal and objective at some point is to teach you how to build a trading plan for each one of these, right? To teach you how to create a plan for each one of these, because each one is going to have its own plan. Each one's going to have its own plan. So day trading, right? We have an amazing program that goes more into the depth of day trading, right? Obviously, as you guys know, there's a lot of things you need to learn about day trading. If you're a brand new beginner, you don't know enough about day trading, at least not yet. All right? You don't know. Okay, there's a lot of rules, there's a lot of regulations, there's a lot of stuff going on out there. But in my personal opinion, if you want to make money trading, if you actually want to make bill paying money, day trading is the best way to carve out consistent profits from the market monthly. Now, if you can't day trade because of your job or stuff like that, I get it, I understand. If you can't day trade because of your schedule, your work schedule, your life schedule, your kid's schedule, I understand. Okay? Now, there are ways you can day trade without being by the computer forever. That's a misdemeanor, not a misdemeanor, a misnomer, not a misdemeanor. So day trading, honestly, when I'm day trading, folks, when I'm doing it by myself, we're talking anywhere between 30 and 90 minutes of actual real work a day. So it's not that much, okay? You don't have to be by the computer for 9 hours to day trade. All right. Now, again, if you're looking at it and you're like, I want to learn where to day trade, there's a company out there, and the name escapes me right now, but if you go to, what's the name of this company? Oh yes, Real Life Trading. You go to the day trading section and you can click on day trading. It's entirely free. I know that sounds crazy. There's no other company on the planet Earth that teaches their day trading program for free, to my knowledge, except for us. So if you want to learn how to do that, hop into that class. But day trading, it's an incredible, incredible opportunity. You don't care about stock possession long term, okay? You don't care about the fundamentals at all, and it's based entirely on technicals. So if you want to day trade, you better get good at candles, and you better get good at candles quickly, right? It's all purely based on technicals. Now, swing trading is designed for the more active traders. It's based mostly on technicals. If you like the information, if you like the company, or you like something the company's come out with, that's a plus always. Stops are a little bit more loose than day trading, and it's great for either bullish or bearish or neutral markets. So let me answer 2 questions that I have in the chat pane really quick. David says, can you get around the pattern day trading rule for day trading? Yes, very easily. Email me and I'll teach you how. Now, secondly, someone was asking earlier about how to set your, knowing how long a trade is going to take, right? I forget the exact person, but someone asked, how long do you know, how do you know how long a trade is going to take? Let's go look at JCPenney right now, And I'm going to do a really quick example of how long that you would know to be in a trade. And so this is a weekly chart on JCPenney. So what I'm going to do is I'm going to draw two support and resistance lines on JCPenney. So here's one and here's one. Okay. So whoever asked that, and I apologize, I can't find the question right now, but it was a great question. So let's look at JCPenney and let's look at some facts. JCPenney bounced from $6 and trade up to $11 once, potentially twice, definitely 3 times. So if it's going to happen a 4th time, how in God's green earth could we determine how long it would take? The answer is, look at the past. That's pretty much it. Go back and see, how long did this last time take? And that'll answer your question. Right? So figure out how far a stock usually takes to move. So this is about 6 months. Whoa, 6 months. Yep. Investing takes time. Okay. Trading takes time. So am I saying that JCPenney is going to bounce from here and go up to here? I'm not saying that it won't do that. It could. I personally don't shop at JCPenney. They don't get any of my money. They haven't gotten any of my money for a long time. Therefore, I'm not personally going to do this trade because this is a longer term trade. Will I day trade JCPenney? Absolutely. Will I do a life trade on JCPenney? No. Why? Because I don't use them. That's pretty much it. I don't use them. I trade stocks that I know. Now, that's the only thing. Right? I trade stocks that I know. So at this level, is JCPenney going to bounce? Maybe it may, maybe it will, maybe it won't. But if we're talking about risk reward, let's just talk about some obvious, okay? If this purple line represents the risk and this line represents the reward, is the risk to reward worth it? Yep. And there you go. From there, you get to determine if you want to do the trade or not. It's up to you. How could you find out if you want to look at the trade? Well, you could go down here to the daily chart. You could turn on the candlesticks and you could look for, oh snap. You can look for a candle that looks like that. Tina says, can you predetermine a sell price when you buy? Of course, absolutely. So there you go on JCPenney. Tina says, that's why you put a stop. Absolutely. You nailed it. That's why you put a stop. So again, the core trading, right, is based on the longer term trader. It's based 80% or more on technicals. I would say this is similar in a way to JCPenney, the trade that we're just talking about. Okay? Because it would take at least 6 months if you're looking at trading it. It's going to be based on technicals 80% of the way, but I'm not going to personally trade it because, I know a lot about the company and they're not making a lot of money, so I'm not going to trade it. Does that mean it's not going to work? No. But you can't trade everything out there in the markets, right? So longer term trading is best used on bullish trades, and as you know, stops are still very important, but they're a little bit more loose. So if we went back to the example on JCPenney, okay, this would be a great example for a swing trader, right? A more active trader, someone who's in and out the markets a little bit more often, just like that. Right above the high with a stop right below the low. All right, does that make sense? Any questions on that? Okay, so I think that's pretty clear. Alex says, what's so good about that candle? It is a hammer, one white soldier candle. It's occurring out of supports. It's my favorite candle. It's just a very, very good candle. Nice long lower shadows. Lower shadows represent buying pressure out of support of which it's bounced before. Now, what if you're doing a little bit of a longer term trade, like a core trade, something that you want to be in for months to years, right? Maybe you get in here, but potentially you set your stop, here. So again, you still calculate the risk. It's the exact same, folks. If the stop right here is 540, entry 640, you're risking $1. Okay. If you did the more aggressive swing trade, your stop would be about 580, and therefore your risk would be 60 cents. Mark says, do you always use the daily chart for swing trades, entry and stop? Yes, sir. Daily and hourly. We're going to talk more about the hourly in the intermediate programs. All right. Dennis says, core tradings seem boring. I kind of agree. I'm not the biggest core trader. I mostly do day trading, swing trading, and long-term trading. But core trading is great for traders who work full-time. Here's the deal, folks. There is no one too busy to not trade. And the reason I'm teaching you that, or the reason I'm telling you that, is because I would like to think that I work more hours than most humans on planet Earth per week. Okay? I'd like to think that. Maybe I do, maybe I don't. But I know even before I did trade full time, I still worked a lot. I like working. Working doesn't bother me. But there is no one on this planet that doesn't have the time to trade. You can just do longer term trading. So this is also great for newer traders, but it does require a lot of, oh shoot, oh no, it requires a lot of patience. Oh no, I thought we were over the patience thing. I'm so sorry. It requires a lot of patience, right? It's spelled wrong, probably is. Shoot, my bad. Needs to be a Y. Needs to be a Y in there. P-A-Y, you got it. So yeah, these trades often take a minimum of 3 months to play out, guys. So core trading takes a while, and you look for high risk reward ratios. And then of course, live trading is great for any type of trader. These trades aren't specifically actively traded. Risk is of course considered, but there's a different way to take risk on with live trading. It's something called protective puts. All right, these are option trades. So anytime I'm doing a long lifetime trade, I use something called protective puts, similar to stops, but it's like insurance on your stocks. Type in a 1 if you've ever heard of homeowners insurance. Everyone here has heard of homeowners insurance. Type in a 3 if you have never heard of stock insurance. If you've never heard of stock insurance, it does exist. It's called protective puts, and I can teach it to you totally for free. Go to our YouTube channel, type in protective puts, real life trading, and you'll learn all about it. Okay? So these trades are typically 10 years or more. So talking about a long-term investment. These are long-term. Okay? So examples of some live trades could be stocks in a college fund, annuities, mutual funds, a company you work for, a company you have ownership in, shares that you plan on donating or passing along to future generations. I think you guys get it, right? It's a long-term stuff. But it's great to know and understand options, to use them as a leverage for live trading, covered calls, protective puts, collars. You're going to vastly use options when you're doing these long-term types of trades. And even if you are younger and you don't have that much money, it's okay to start investing now into a long-term company like Apple or Exxon or British Petroleum, something that's going to be around for a very long time. Okay, so I know we talked about a lot of things tonight. I get that. We talked about tons. So the good news is I recorded every aspect of this class. It's going to be on the website. Most of you are probably, if you're watching right now, you made it to almost the whole end. So congratulations. Here's the action steps that I have for you. I want you to tell everyone you can about real life trading. Our mission is to enrich lives, and I want you to help us with that So I want you to tell people about us. I want you to let people know, hey guys, these are for real. I've been through 2 classes so far, no sales pitch, and there's no sales pitch that's going to come. So don't worry about it. It's just not going to happen. If you ever have any questions, you can email me, jeremy@reallifetrading.com. Okay, and I'd be happy to assist with any questions that you have. Feel free to review the material. If you're watching the recording, just go ahead and hop over to class 3. Class 3 is going to be called The Tools, and we're going to be talking about brokers, and that will be live tomorrow, 8 p.m. Eastern, for anyone who's here in computer land. But for the next 3 minutes or so, do I have any questions, ladies and gentlemen? Brian says, you're my hero. Dude, I think the exact same thing about you. So thanks so much, man. I appreciate that. Steve says, I'll be here. Lovely, man. Thank you so much. Andy says, could I trade any options if I do not have an account large enough to purchase 100 shares at the same market price? Yes, you can still trade options. Absolutely. Joe, it's very kind of you to say, man. Thank you. Thank you so much. So again, if you have any questions, you're welcome to email me, jeremy@reallifetrading.com. I know there's a lot of questions tonight. Unfortunately and fortunately, I can talk about this stuff for 9 hours straight. I can make every class that I have insanely long, not because I need to, just because I love this stuff, right? Alex says, when are you teaching options? Oh, my good friend, great question. The good news is I've already taught it. So if you want to learn anything about options, in fact, this is a really cool strategy for anything you ever want to learn. Type in trading options. Type in anything you want to learn, and then followed by real life trading, and press enter, and all kinds of stuff will come up for you. That's a great strategy for anything you want to learn. Type it into YouTube and then type in real life trading. So you're going to have this options class, this options class, this options class, and this options class. There's 4 right there. And you know what? They're not going to cost you a dime or a nickel or a penny. Thanks so much for being here, ladies and gentlemen. You're absolutely sensational. Make sure to subscribe to our YouTube channel because I do put out this kind of content all of the time. Our mission at Real Life Trading is to enrich lives. Thank you so much for helping us with that mission. If you know anyone who speaks Spanish and you prefer for them to learn this information in Spanish, I even got a translator for these classes in Spanish, ladies and gentlemen. Are you kidding me? No, I'm not. Mind-boggling, right? Not only do we have Spanish, we also have French Canadian. For anyone in the Quebec, Montreal area, we got the classes translated in that language as well. Unbelievable. We're working on German. We're working on Mandarin. We're working on Russian. Real Life Trading is going to sweep the internet with education, teaching people from all ages, from all walks of life, from all income levels, how this works, what the stock market is, and what it means to be a real life trader. You guys are amazing. You rock. And until next time, love life, live life, and trade it. I'll see you later.